All right, let's take a look at our head and shoulders reversal example. In this case, we're going to use Archer Daniels, and we're going to take this stock from the period of April 1997 through October of 1999 and show you how we would have identified the head and shoulders reversal and how we would have managed the accompanying trade. At this point, you've got a very significant uptrend in place, as you'll see right through here. So now, when you have an uptrend like that, you want to look for reversals. So in this case, we had the stock peak, pull back, and reverse back. So if you're looking for head and shoulders, you're going to want to establish this as your left shoulder, and then you'll see the stock bounce right through here. You'll see the stock rally and reverse again above the left shoulder, so this becomes your head. Okay, now the stock has another downtrend and bounces right here. That level becomes what's called your neckline, which becomes the area that you're going to want to look at for potential buy points. Okay, so you see the stock bounce again and then rally, and now you've got your right shoulder forming right here. Okay, again below the head, so you've got your left shoulder, your head, and your right shoulder, and an accompanying downturn. So now what you're going to want to do is you're going to want to look for potential stops, or excuse me, short positions. Our first short opportunity would be right through here. We would take the position right at $15.75. The stock immediately tanked, as you can see, and made it all the way to 14. In this case, you would have managed your trade by taking your stop from an 8% loss to perhaps break even or even capture some of your profits. As you can see, the stock jumped here and then reversed again. So we had an opportunity to take this trade again because you would have been stopped out, and you would have had an opportunity to re-enter the trade right here. Now what you'll notice is on this one, when it crosses through, you've got very significant volume to the downside, which again is a very powerful sign that you might have a potential winner on your hands if you're in fact shorting this stock. So you would have taken the position here again, set your 8% stop, and that stop never would have gone off, and you would have seen a major downtrend in this stock that you could have candidly managed all the way through here if you kept adjusting your stops. So you've got an example of a left shoulder, the head, the right shoulder, your first buy point, you would have taken profits or been stopped out at break even. Then you had an opportunity to get in again, and then had a huge winner on your hands going through all the way through October of 1999 if you managed to trade properly. Again, Archer Daniels Midland is our example of a head and shoulders top reversal.